Friends, welcome. Today, our topic of discussion is capital market. In the previous session, we have discussed various relevant points regarding money market. And being a student of business, you must be aware to run a business, we need short-term funds as well as long-term funds, right? To meet our day-to-day requirement, let us say for working capital or maybe for the current asset, we need short-term funds. And if there is some, let us say, short-term surplus of money, we should also know what is the opportunity to invest it in short-term. So for this thing, short-term funds as well as for short-term investment opportunity, one may think of money market instruments. They are, you can say, they will give you scope to do all that thing. But in case you need long-term fund or if you want to make investment in long-term basis, then you have to go to a different market, which is called as the capital. Right. So in our previous class, we already discussed that the financial market, we can classify it into two categories depending upon whether it is a short-term instrument or some long-term instrument which is dealt in that market. So let me share the screen with you right now. Yeah, in the previous class, this is what we have understood, that money market is the market where short-term financial instruments like treasury bills or bills of exchange, certificate of deposits, all these things are traded. And the duration of most of all these financial instruments are within 1 year. And if financial instruments like shares, debentures, bonds, one need to issue or one needs to investment in this kind of instrument, he has to go to a different market, which is called as the money market. And the duration of the instruments which are bought and sold in this market are more than 1 year. This is what we have understood. Okay. And this long-term market or long-term finance market can be referred to as the capital market. So if you try to understand what is this capital market or what is the need of this capital market, you can see some of the points which are written in this slide. It provides resources needed by medium or large scale industries for investment purposes. Right? Suppose a company or an industry needs some money for making investment in plant and machinery, land and building, etc., which are long-term investments. So they can go to this market and search for finance. They are relatively long-term financial instruments. Relatively long-term financial instruments are dealt in this market, like equity shares. Equity shares are also, it is, you can say, perpetual instrument kind of thing, or it can be bond with fixed maturity period. So they're relatively long-term financial instrument. So this capital market is the largest source of bond. Some of these instruments have long lifetime, like period, and some of them have indefinite maturity, like equity shares. Okay, equity shares do not have any fixed term. The life of that equipment is forever. This market provides a number of investment avenues for the investors. Investors can choose various options where they want to invest. Capital market instruments are a vehicle between the company and the investors. Investors having excess money and companies in need of money. So this capital market bridges that gap. It helps in transferring the surplus money of the investors to the company who are in need of things. That is the key role of capital market. And this capital market, for our understanding or keeping in view various functions that you can classify into two categories, as you can see in the chart. One is primary and the second one is secondary. So the primary market deals with various kinds of issues like public issues, when shares or debt instruments are issued to public. It also deals with the right shares, bonus shares, private placements, and preferential allotment. And coming to secondary market, it deals with the listing of securities, trading, that is buying and selling of securities, and the practice of settlement and clearing. So these are the aspects which are dealt in secondary. Okay, so one by one we'll see. Today first we'll focus on the primary market. We'll try to understand what is primary market. It is also referred to as the new issue market because securities are issued in this market for the first time. After that, it is dealt in the second market. Securities gets listed in the stock exchanges where this can be bought and sold. So secondary market means it refers to the platform of stock exchange where securities can be bought and sold. Now you see, to meet the financial requirement, various companies raise capital through issue of securities. When I say securities, it includes both shares as well as debentures. And this primary market is controlled by Security Exchange Board of India Act 1992, popularly called as SEBI. SEBI is the regulator for these markets. This market helps transfer of resources from savers to users. Who are the users? The companies are the users. They are in need of money. For their capital requirement, they are in need of money. And you and I are the investors. So there are some people who are investors who are having some surplus money. They want to make productive use of it. They want to earn some return out of this. And there are certain companies who are in need of money. So because of existence of this primary market, the surplus fund gets transferred to the people who are in need or to the companies who are in need of funds. So therefore, this market facilitates transfer of resources from savers to users. And if you talk about the primary market, it is the market where securities are created. Why I'm saying securities are created? Because securities come to the market for the first time. First time when company is issuing some equity shares. Right. So therefore, you can say securities are created in this market. Small firms float new stocks and bonds in the public for the first time. How they float? They float in the way of initial public offering, which is popularly called as IPO. IPO is an example of primary market. Investors can buy the IPO at a price from the issuing company. Of course, IPO securities are listed in the stock exchanges. That means thereafter it can be bought and sold by anybody. But initially, it is the company who issues those shares or those debentures. So investors, in fact, buy at a price directly from the issuing company. That's why it is called as the initial public offer. Initial means it is coming for the first time to the public. That is what the primary market. Coming to functions of primary market. So broadly, you can say three kinds of functions. One, origination. Okay, origination means when, as you know, securities are created in this market. Under this, therefore, primary market undertakes various kinds of functions, like investigation about the company, about its financial. It does market analysis, processing of new project proposals. Okay, so most of these things are done by the merchant bankers. Merchant banker is a participant in primary market. You can say it plays a key role in the primary market. It analyzes, it investigates about the new project. Okay, it also helps in arriving at the offer price. So this origination, security creation related activities are handled with the primary market. Then one more important function of primary market is the underwriting function. Okay, let us say securities are issued, securities are offered to the public. Then what is the guarantee that this offer will be subscribed? What is the guarantee that the minimum subscription will be made? So somebody should give that guarantee. Somebody should stand as an underwriter that this much of security will be subscribed at this price. So this is one more function of the primary market, to carry out this underwriting activities. How underwriting happens? One process is that the standing behind the issues. That means issue will be made as it is, but there is an underwriter standing behind the issues in case the financial instruments or the securities are undersubscribed, then the underwriter will subscribe the remaining uh, securities. He's just standing behind this. If they subscribe or oversubscribe, no issue. But in case it is undersubscribed, the underwriter was given guarantee will come into the picture. Till that time, you stand behind this. That is one kind of underwriting which is done in the private market. One more kind of underwriting is the outright purchase and subsequent sale. Here, what happens? The underwriter purchases the entire securities. That means at that moment, you can say the securities is fully subscribed. Subsequently, it is the underwriter who resales them. That is one more method of underwriting. And there is one third method also, consortium method, where a group of entities, the group of underwriters come together and stands as a guarantee. So normally in case of large issue sizes, underwriting happens in group, or you can say consortium method of underwriting is. This is one more function. Then after this origination function and the underwriting function, one more important function is also carried out in primary market is the distribution function. Now securities, let us say public has applied for the securities that needs to be distributed. Shares needs to be allotted, debentures needs to be allotted. Right. It has to be distributed to brokers and agents. This is one more function. So broadly, if you classify about the functions of primary marketing, is about origination function, underwriting function, and distribution function. Hope you have understood this basic things. Now, one thing might be coming to your mind that who are the players in this private market, or who are the participants? Okay, one major participant is the merchant banker, who does all the issue related activities. Okay, it helps in printing the prospectus, let us say share application form, managing the entire issue, arriving at the price or price band, all these things are done by merchant banker. There are registrars of issues who manages the registration of securities process. Then collecting and coordinating bankers, they collect share application money from various investors from various parts of the world. Underwriters, as you know, who underwrites the issue, gives guarantee that issue will be subscribed. Brokers, they also helps in selling the share application forms. They charge their commission. Printers, advertising agencies, mailing agencies, all these people are involved. Okay. So normally in a primary issue, stock exchange involvement is very limited. But primary issues, when listed, then stock exchange comes in picture. Okay. Most of the IPOs are listed. What is listed? The equity shares are listed in the stock exchange. So that is the role of stock exchange. So these are, you can say, the players of the primary market. Okay. And in primary market, what happens broadly, shares are issued to public. So the public issue is the main function, which is all, of course, a part of distribution function. So we need to understand at this stage what is this public issue. When you say public issue, it means fixed number of shares are directly offered to the public or some institutions. So a member of public or an institution can buy directly from shares at a fixed price, which is stated in the prospectus. So prospectus must be stating that this many shares at this price are offered. Okay, that is normal issue we are talking about. Okay, of course, there are one more kind of issues which is called as the book building issues. That is issued through book building process. In that case, what happens? The fixed price is not mentioned in the prospectus. In that place, what happens is price band is given. That means price is, let us say, from 100 to 110. That is a price band. Now, what will happen? People will give their quote. Right? People will give their quote that how many shares they want to buy at what price. Then company will maintain their a running book will maintained by book runner will maintain that how many shares are offered at what price. offered for subscription. When the maximum shares are offered at maximum price, company will freeze that up. That is the process of. Got some idea? So what I told you, normally fixed prices are stated in the prospectus or through group building process by issuing a red herring prospectus. Red herring prospectus is a prospectus where price details are not there. Okay, I'll show you red herring prospectus some other time. Price data will not be there. Then how price will be determined? Through this book building process. Okay, if you want to have some idea at this stage, let me take you to the website of a stock exchange. Then I think you'll be having some idea. In case there will be some live book building process, you'll be able to see it. Just give me a moment. Okay, friends, let me take you to BSE site right now. What are you seeing on the screen? Can you tell me what I typed?
Sir, bsindia.com.
Okay, now you see, let me take you to this BSE India site. You see, yeah, here you can see one link, public issues. Are you able to see it? So now we are talking about this public offer or public issue. This is, are you able to see it? Public issue.
Yes, sir.
Okay, there are various other things in the site. Some other time I'll try to explain you what are the things. Now public issue. Let me click here on public issue. Yeah. So this is, you see, various. This is in fact the performance of IPOs. So in this year, 58 IPOs have been initiated. 41 IPOs are there on the BSE main board. IPOs or BSE SME segment is 17. These are the 41 IPOs who are gaining, and 16 IPOs who are losing. IPOs gain on the listing date 40. You see, this is the statistics about IPOs. Right. Now, if you see here, live issue or performing issues, you see, this is the start date and this is in operational. You see, this is the offer period. You see, 29 September 21. And when it is, the offer is ending?
So 1/10/2021.
Today.
Yes, sir.
Are you ready? Do you find any fixed price? What you find price is?
Sir, from 695 to 712.
This is called price band. This is called price band. Okay, how it is issued? This is the type of issue.
Book building.
Book building process. Okay, so thankfully today you see one book building process. After that you see this offer, you see. What is the price? This is also closing today, right? What is the price?
Sir, 40.
Okay, and what is the method of issue?
Fixed price.
You see, there is no price band here. It is fixed price, right? And the face value of this share is 5. Aditya Birla Sun Life AMC Limited. Okay, and Sri Venkatesh Refineries Limited face value is 10. This is the face value of equity shares. The 5 rupees share is selling at this range. This is the price band. Its live booking is going on, so people must be offering. It will close. Okay, suppose company has issued 5 lakh shares. If entire 5 lakh is subscribed at 712, then company will be happy to do that. Is it not? People are giving their quote. Let us say 5 lakh is not subscribed at 712. 5 lakh is subscribed at 699. Then company has to freeze there. Okay, at 712, only 4,50,000 shares will be offered. So on that basis, it will be decided. A running record will be maintained. Then what is the maximum price at which all the issues will be subscribed. And at that price, company will freeze the offer. Okay. So as you can see, debt issues are also there. This capital market is both for equity as well as debt. Okay, so let me show you this IPO book building process, because tomorrow you may not get an opportunity. This issue plays for this today itself. Tomorrow this data may not be available. So let me show you that book building process so that next class I don't have to visit here. Now let me click here at the Vela Sun Life. Now you see various data. You can see this is the exact data. You see security type, equity. This is the symbol. This is the issue period. Okay, so this is the IPO marketing time. Now you see how many shares are issued. You see this many shares are issued. Okay, can you tell me how many shares are issued? Are you able to see it?
Sir, yes, sir. 2,77,99,200.
Yeah, this many shares company is planning to sell, and company has decided this price band. This price band is decided with the help of merchant banker. So company feels that at this range, entire shares will be subscribed. So price band, as you have already seen, 695 to 7. Okay, if you want to see the advertisement of the price band, you can click here. You can see face value is 5. Like this, you have to do it. But what is more important here, today, other detail you can see later of the other company book running. Prospectus, you can see it here. Prospectus, if it's possible, I'll try to show you today so that you can have an idea how prospectus is issued without pricing. What is the red herring prospectus? I'll be able to, I can show you here. But before that, what I wanted to show, yeah, you see, cumulative bid details. Let us click here. Yeah, I got it. Please see. So, now this shows what is the bidding position as of now. Are you able to see it? You see, at 695 entire shares, this is, I think, this is the number of shares company has offered. So maximum people are saying at 695. If the price is a low price, then people will be easily subscribing the entire share. Is it not? If the company decided 695, then entire shares will be subscribed. But 696, this is the bidding position. Shares are undersubscribed. Are you getting it?
Sir, I think the screen is freezed.
Sorry?
Sir, the screen is freezed, I think. We
You
are
are
still
not
in the
seeing?
phase that is. No, sir.
Okay. Just give me a moment. Once again, I am sharing the screen. Are you not seeing this now?
Yes, sir. Yes, sir.
Now you see
This is
what I
visible.
have done, and previously I clicked that link, that cumulative bid quantity. Up to that you had seen. When I clicked it, I am
Yes, sir.
seeing this data. Okay. Right. This is the data I am seeing. So are you able to see at 695, the entire share will be subscribed. But at 696, but the bid position, you see shares are undersubscribed. At 697, little less number of people are ready to buy. So if you maximum price 7, 12, only this many shares will be subscribed. But issue is open today also, today up to 5 p.m. So let us say company will wait till 5 p.m. If at 5 p.m. at 7:12, that entire shares will be subscribed, that company will freeze it. If entire shares are not subscribed, suppose company will say at 7:07, entire shares will be subscribed. So company will freeze here. If position remains as it is, then company will issue at 695. Are you getting the process?
Yes, sir. Got it.
This is usually live book building process. So this is the cumulative bid quantity data is available at any time. You can see it at the website. You yourself can try, or you can do one thing at 5 p.m. You can check it for the situation. So you can understand how the company is closing the book building process. Okay. Got it?
Yes, sir. Got it, sir.
Okay. So let me once again take you to the previous screen. So let us see this cumulative demand schedule. This is the demand schedule. Company can see that how much people are demanding for how many shares. This data for this company, one can have a look, one can analyze who are the demanding. Yeah, one more thing, in fact, I wanted to show you. I wanted to show you the prospectus also. You see how the issue is managed. These are the book running lead managers. You see, book running lead managers are here. Registrars of issues are here. These are the sponsored bank. Yeah, I wanted to show you the prospectus segment. So for prospectus, I think I have to download it. Yeah. So prospectus I have downloaded so that you can have it. Just give me a moment. Let me extract it. Friends, just give me a moment. It is downloaded as a zip file. So once I extract it, I'll be able to show it how a red herring prospectus that is without pricing detail looks like. That is my intention. Yeah, I got it. Okay. Are you seeing anything on the screen? No, no.
No, sir.
Just a minute. Don't worry, I'll be showing you. I wanted to see you that prospectus. Book building process, I think more or less you have some idea now. Prospectus, yeah. Yeah, are you able to see it now? General information document for investing public. So today, this is an
Yes.
exercise I'm giving you. All of you may visit to BSU website today. Download this. Just go through this. If you're having some idea about issue-related process, you see purpose of this document, benefits, categories, how one can apply, offer procedures, book building of offer. These procedures are also explained here. One can go through it in the prospectus. Okay, you see this offer company describes what is the purpose it is saying. Red herring prospectus, that is price details will be not there. Price detail will be arrived at through this bidding process. That is called as book building. Okay, that has been explained here. Right. Offer details are here. Here it is an IPO. All these terms are explained. So one can just go through it. Okay, how issue can be made. This document is issued by public. Okay, this is in fact you see share application form for resident. This form can be filled up and applied. Okay. Okay, what is the minimum subscription? All these details are there. You yourself please download. I can easily send it to you, but you please try yourself. Please download this document. So that will help you to understand the entire process. Okay, this is the task for me. Will you be able to do it?
Yes, sir.
Yeah. So you can understand book building process will be clear today, but you have to do it today itself. Today is the last date. Okay, now if you let me take you, yeah. So that is about book building process. So if you like to take you to some fixed price of once again, I'm going to public issues. Let me show you some fixed price of. Just a minute. Are you able to see the BSc homepage now? BSc homepage.
Yes, sir, it is visible.
Okay, okay, you see. Now you see this is the live issues that are available. Let us go here. Sri Venkatesh Refineries Limited. This is a fixed price offer. Okay, fixed price offer. You see, here price is fixed. Right, issue price is 40 rupees. Premium is 30. And this issue is closing on as today. This is also closing on today. Okay, so different people are applying for this thing. You see, download application form. Here one can download the prospectus. Okay, here prospectus, it must be mentioned. It is a fixed price offer. You did not give any code. And how many shares are offered? Here, issue size, you see. 22 lakh, so 29 lakh, 28,000. Right? And if you want to see the cumulative bid details, so at 40, these many shares, these many people have already applied. Okay. 39 lakh 90,000 already applied. What does it mean? It is already oversubscribed. Got it?
Yes, sir. Yes, sir.
Okay. So I think now you're having some idea about this IPO process. Okay. So as you have seen, a fixed number of shares are directly offered to public. At a fixed price, you have understood price is also fixed. Or through group building. If it is not fixed price, then it is through book building process by issuing a red herring prospectus. Okay, which is called as the RHP. RHP means red herring prospectus service. Okay, advantage is that you can invite large section of so many people are you are inviting simultaneously. No intermediaries involved. Non-discriminatory basis. Anybody can apply. It will be reflected in the cumulative data. He may be allotted to shares. If shares are oversubscribed, then proportionately shares may be allotted. Okay, it is an expensive method. So many you see that book runners, so other merchant makers are involved. It is suitable for large issues. If you are coming up with a large issue, this is a very useful. Okay, there is one more kind of sale of securities which is called as BOD or bought out deals. What happens here? Issue happens in two stages, and intermediaries is involved. Okay, so what happens? The issuing company directly sell to the broker at an agreed price, and the broker resell it to the ultimate. So quickly, shares can be issued very quickly, but it will involve a two-stage process that is called as the offer for sale or bought out deals. And in between, the intermediary may give some margin that is called as that is spread or torn. Company is relieved of printing prospectus, advertisement, all these things. Company will sell it to the intermediary, intermediary will resell it. This process is called as the offer for sale or bought out deals. Private placement you might have heard of. This is again one more kind of public, one more kind of issue. Brokers act as wholesalers. They buy securities outright and place them with their clients. So in their own circle, they confidentially place it. Okay. Okay. They removes the fear of takeover. So within your circle, these are within your friends and relatives, these are so. Right issue and bonus issues are one more kind of issue. Preferential allotment, block shares are issued at a predetermined price to individuals, venture capitalists, etc. This is one more kind of issues. So these types of issues will be again discussing in our next class. Now you have seen how issue happens, got some broad idea. Next class we'll again catch up and we'll be understanding some other types of issues. Okay, friends. Any query you have, you may ask it. Otherwise, we are closing our session.